Investors and traders, welcome to the channel Market Chart Pattern. Today is 11th of January 2025. Hope everyone is having a great weekend. So we'll be taking a look at the key US financial stocks and ETFs in this video. I will start by taking a look at the KRE, which is the Regional Banking Index ETF, and then the XLF and the key big banking stocks. As always, the video is for educational purposes only. It is not a financial advice. So here is the weekly chart for the KRE, the regional banking ETF, and we had our original targets of around here about 62 bucks, which was reached, and then in the enthusiasm after the elections, it actually went right to the 78.6% retracement, and then you can see that for a number of weeks just been coming down. So our target was met, and we were just watching price action right here with no further targets to the upside. And what we are looking at is basically this is a lower high compared to the high right here. And this is around in March of 2023 when the Silicon Valley Bank collapsed. And this is where, with the help of the Treasury, the Federal Reserve, they started to inject the liquidity into the banking system. And there is this concept of too big to fail. So those really big banks such as JP they were actually able to acquire the assets of Silicon Valley Bank in the United States at least. And some of the other banks which were near failure were also acquired by either private equity or some, I don't know exactly what the deal was. So after that, we began to see improvement in these regional banks, and then it went right to our targets. So keep in mind this high is actually a lower high compared to the high which was made in 2022. So it's not looking that great. And the other concept that we like to use here is basically market symmetry concept. You can see that last week the market actually broke below that, and it looks like it wants to come down and touch this trend line right here. So let me actually try working out the retracement level. So yeah, it's right at the 50%, but it's got a chance to actually move lower, where we will be having 61.8% retracement around 55. So it's beginning to look more bearish now. So we'll just keep on watching it. In this entire run, this was the biggest decline that we had seen. So the market is right up to that. Any further declines, and especially the break of this trend line, is not going to be that good for this. Now let's take a look at the XLF, which is the Spider Select Sector Fund for Financials. So this also includes bigger banks. So there's JP Goldman Sachs, and also Visa and MasterCard and Berkshire Hathaway are also part of it. So we had been watching for this level 49 with the possibility of maybe a bigger ABCD completion. But what the market has done is, ever since it completed this smaller ABCD around 50, it's a sort of pulled back right now, sitting at pretty much the 20-week moving average. The biggest decline that we have seen is this much in this entire run up from the lows of October 2022, which is when the market completed its bear market moves. So it looks like there's a further downside to go, and we have the 38.2% retracement coming around 43. So we'll be watching this, I think, getting below this, and we have some support coming in around the 41 mark as well, which is from the structure. Breaking that, I think, would be actually not that great. So breaking below the 20-week moving average, I think it's beginning to look more bearish now. Now, if we take a look at the Goldman Sachs, here we go. This is the weekly chart. We had our bigger ABCD, which was this in brown. It completed around the 570 mark. The market actually continued and went a little above 600 actually. But what we are seeing now is basically the market has gone nowhere and it's just pulling back. Still strong stock. Look out, where the 20-week moving average is, but it just shows that there is some distribution, and it could be kind of expected after having such a a really big massive rally after the elections. So we'll just keep on watching this. As mentioned previously, our analysis was to actually have sideways to down movement in this, and this is what we are looking at. So further downward movement is possible. There is the way the week closed, I think there is a possibility we are looking at for an ABC structure like this, 526, round about the base of this big massive candle, which could actually be an exhaustion candle. So this is what Goldman Sachs looks like on the daily chart. Here we go. Yeah, so there we go. That's our trend line, and this is the biggest um, symmetry concept we have declined we have seen in the past. So chances are it's just coming back to this 89 period moving average, possibly even break the trend line, which is not going to be that great for shorter time frames, but looks like it wants to do that ABCD like this. So here we go, and here we go right to the 50%. So that's the ballpark figure where we can expect this market to actually kind of move into. So around 520 bucks, 525, 520. By the looks of it, this is where it might be actually going. Now let's take a look at JP Morgan. This is the weekly chart, and our really key level came in on the 25th of November 2024. It hit the 250 mark. Pretty significant one because it completes this bigger extended ABCD, whereas the CD leg is 1.618 times of the AB. And we have seen a pullback. It pulled back right into this symmetry right here. And what we have going on is there's a chance that it also wants to do an ABCD correction to the downside. So 225 bucks is looks like where we have the 38.2% retracement from this level. So looks like it might want to go there. So let's have a look on the daily chart. So you can see there is similarity between this chart on the daily with the Goldman Sachs. So clearly this is a sign of distribution here, at least on the daily. And we might be looking at this structure of ABCD. Here we go, right here. And actually, let me also draw 1.61. Yeah, I think most likely it's gonna end up there around the 220 mark. One of the things I really want to point out about JP Morgan is, look, a fantastic company, a fantastic bank, run by the superstar Jamie Dimon, superstar CEO. Look at this really long-term trend line which has been intact. It completed a really big ABCD which now has extended, but I have not extended it on my side, on my chart. These are really big ones which are completing around these levels. Let me actually see what level we get to. And there we go. So that's at least 1.272 right here. Right here. So there we go. So here, you can see on weekly basis, monthly basis, we are kind of consolidating. We have had an inside month. And if we begin to close below the monthly closes, especially this mother candle of 1st of November 2024, we could see further declines, maybe test of 190. So let's just keep on watching this. So that's really interesting. I think this stock is likely to keep on being range bound. And one of the reasons could also be that maybe this is what Jamie Dimon has publicly hinted: retirement. Although he's going to choose his team, but the market could make some adjustment. Now let's take a look at the Bank of America. Here we go. So this is the weekly chart of Bank of America. It's one of our favorite banking stocks, but I think it has also reached its targets, and now it's just gonna probably move sideways to down. We have got this big move. We could see a move lower to around 38. So we'll just keep on watching it. It might actually do it in A, B, C, D fashion. So that's possible, like this. On the flip side, if it just it takes out these highs, then it's gonna go and make a new all-time highs, but the chances are sideways to down more than for the up move. Morgan Stanley, you can see that went right into this target zone, 1.618 expansion. Now it's just sideways. Wells Fargo, similar kind of pattern formation, but also with an ABCD. So I think it's a bigger pattern completion. And then if we look at Citigroup, here you go. I think it's just not been able to make a new all-time high for quite some time. So there we go. And let's take a look at the American Express, AXP, and it's look fantastically the ABCD, extended ABCD, fantastic pattern, and it's just now going sideways, so in a trading range. So I would expect further weakness to come into it, and this is the kind of pullback we had seen before. So maybe it just pulls back further, maybe even to 20-week moving average. So this is by the looks of this one. Now let's take a look at Visa. And it has also completed big ABCD and just sideways down. I think it could actually move a little bit further. That's gonna be about this much. So if it's gonna do the same kind of correction, we could see 280 on this one quite easily. The stock will still be fine, but this is the symmetric pattern we have here. So this is the biggest correction that we have seen, so maybe it just declines by that. I've not drawn the retracement here. And then if we take a look at the MasterCard, here we go. So we have the ABCD, and look perfect here. The MasterCard is beginning to look weaker than the Visa. This is the symmetry here, so we can see it come to 477. There we go, 477 could easily be reached. And if we take a look at Berkshire Hathaway stock, this one, yeah, this is the one I've been talking about for quite some time. You can see that it also completed its bigger ABCDs here. It's just been trading in a range in a range bound fashion. I think if it closes below the 437, then it looks like we can see a retracement down to about 400, maybe a rally, and it completes ABCD right into 360. So they might actually do the correction in this kind of structure. So this is what we are looking at in the key US banking stocks and ETFs that we like to follow here. So thank you very much for watching the video, and if you happen to like our technical analysis, then please do subscribe to the channel, and if you do, then hit that bell icon button. That way you will know when the new videos are posted. And also if you found this video useful, give it a thumbs up. So thank you very much, good luck, good trading, and speak to you guys soon.